So today we're going to talk about SPACs near net asset value or NAV that have a lot of potential and I think are undervalued for where they are. Now, if you don't understand what net asset value is, it means the share price of SPACs will almost never go under $10. So if we find SPACs that are pre-announcement but are near $10 and we think that they're going to announce a very exciting company down the road, well, that is a buy opportunity. And should the SPAC announce a very exciting company, well, it's going to be a very good return on investment. So with that in mind, let's talk about a couple SPACs I think are going to be possible contenders for something of that effect. So the first is Hig Acquisition Corp, under the ticker HIGA, and currently the price is very near net asset value. And while the management team is not hyper-focused on a single industry like some other SPACs that we're going to be talking about today, there's still a solid leadership team from former executives across multiple industries that have all touched technology in some way. So the combined experience of the executive team means they could effectively find a deal in the technology industry, which would be very exciting. And while it's too early to tell where this will go, a near net asset value price means that this is too attractive at this point given the track record of the management team. So as a target, HIG plans to leverage their deal sourcing network, which has investment experience in the healthcare, technology, media and telecommunications, services, industrial, and consumer sectors. So I see them as one to watch and one that has a lot of potential given their track record. The next one I want to look at is CRHC, which is Con Robbins Holding Corporation. They're also looking to acquire a technology, software, or fintech company. Leading this SPAC and who it's named for is Gary Cohn, who is a former president and co-chief operating officer and director at Goldman Sachs. Gary will certainly have insight into fintech from his experience at Goldman Sachs, and from my research, he's been very active on the boards of many startup companies. I'm speculating a little bit here, but I think this could be in the blockchain fintech space. With an initial IPO of over 800 million, I think the opportunities here seem pretty diverse. So I think Gary and his team have the experience and know-how to carry this one through, and fintech is super hot right now, so this is exactly the sort of undervalued SPAC I'm looking for, and one that I think is going to definitely deliver. But let's say you've been riding the EV SPAC train lately, and you're looking for a SPAC that is specifically targeting an EV company. Well, that's where Peridot Acquisition Corp, under the ticker PDAC, could be right for you. The company management of this one is stacked with multiple people with frontline industry experience leading energy companies and companies that specialize in investing in energy. I strongly expect the PDAC will find a suitable target based on their management's past track record. The prospect of acquiring an environmentally friendly company in the current environmental boom makes me feel like this SPAC could be absolutely one that moons. But as we often talk about, experience really matters with SPACs, especially the experience of the company taking the SPAC public. SPACs are very complicated merger deals. So any experience with prior SPAC mergers and acquisitions, that goes a long way to making sure that the SPAC is successful. And so I'm constantly looking for SPACs that are around net asset value, that contain management that have previously gone through a SPAC deal. To that end, FTOC, which is FTAC Olympus acquisition, have a history of 2 successful SPAC acquisitions and transactions, which have given shareholder value of 30 to 60% returns, and they have impressive experience as a successful entrepreneur in the banking space. So I have high confidence that Betsy and her team have the connections to find an opportunity through leveraging their knowledge to find a winning company. I think the downside risk is very low, and there's considerable upside potential based on their competence and track record. I'm aiming for at least a 10% return here with limited downside risk at this point. They're looking for a technology or fintech company that powers transformation and innovation. Another SPAC that has a very strong person at the helm who has experience in this space is Horizon Acquisition Corp 2, or HZON. And leading that SPAC is Todd Boehly, who has a history of acquiring strong businesses in the entertainment space mixed with the business knowledge that comes from being the co-founder of DraftKings, as well as MRC, a diversified global entertainment company. I think his team has the contacts and frontline know-how to seek out and adequately evaluate a successful entertainment business. Now, the downside risk is a little bit higher for this one due to the recent hype for the stock, but I think this team has the credibility to find a business that can perform strongly after despacing. And we've definitely seen the potential of a SPAC like DraftKings, so I think this is one to definitely watch. And with the team behind this one, I think this is a surefire winner. I think the media and entertainment industries are going to have a strong comeback. And so looking for acquisitions and public offerings in that space is a very strong play right now. Now, as a bonus for this video, one SPAC that I think is clearly undervalued for where it is and what it's doing is GHIV, taking United Wholesale Mortgage, or UWM, public. Now, UWM is a flourishing business. And in fact, they're the second largest mortgage company in the country by volume. We just saw IPOB, Chamath's SPAC, who took Opendoor, go public. And that just went absolutely ballistic. So real estate is a hot topic right now. And yeah, GHFV has had some pumping recently, but for it to only be barely above net asset value, I think it only is because this is a more mature business. But frankly, this company has the most revenue for any SPAC anywhere. So I think it's a steal for it to be so vastly undervalued. I easily see this going to $15 per share or higher, as it's a very solid company. And you can even base this off of the competition and see that UWM is a very different player. They're essentially the McDonald's of the real estate space. They provide the cheapest loans, the best rates, and again, they're a volume business. So I think it's an easy play and one that's going to pay dividends far into the future. So that's my list of some of the undervalued SPACs out there right now. But I want to hear what you think. What are other SPACs that you're watching that you think are going to take off that are very undervalued for where they are? Let's discuss in the comments below, and if you haven't done so already, come join the 10X Tribe, our free community all about sharing opportunities, growing your small account to 10X and beyond, and taking your trading to 10X and beyond using our 10 steps to 10X. It's free to join, and I encourage you to do so. End your 2020 with a beginning. Link is in the bio below, and I'll see you there. But until the next one, thanks so much for watching. Take care out there. Cheers.